Hi there, welcome to The Open right here on BNN Bloomberg. Let's get to the big stories we're bringing you from our newsroom. Shares in tech resources are higher in the pre-market. British miner Anglo American has received approval from the federal government to acquire the Vancouver-based company. This clears the way for the creation of a $50 billion U.S. metals giant focused on copper mines in Chile and Peru. The companies say they will seek inclusion in Canada's major stock indexes and spend at least $4.5 billion in this country within 5 years. Montreal-based WSP Global has reached a deal to buy a U.S. engineering firm from Warburg Pincus. WSP will pay $3.3 billion U.S. in cash for TRC Companies, which sells engineering and consulting services to electrical utilities, energy firms, and other customers. The company says the transaction will position it as the largest engineering and design firm in the U.S. Shares in Ford up slightly in the pre-market. The automaker will take $19.5 billion U.S. in charges tied to an overhaul of its electric vehicle business. Most of those charges will come in the fourth quarter. As part of a strategic shift, the company is canceling its electric truck series and focusing production towards gas and hybrid vehicles. Ford has also boosted its 2025 guidance. We will have more from the CEO in a minute. And U.S. futures pointing down right now. Nothing drastic, but Nasdaq down about 0.5%. And let's have a look at how the TSX traded yesterday. Still down from Thursday's record high close. And let's focus in on gold here. See how our favorite commodity is doing right now. Well, of course, we love them all. We love all the commodities. Gold moving closer to record highs. It's very close to the highs that it got to earlier in the fall. Let's have a look at the Canadian dollar and see how it's faring. And it has been showing some signs of strength lately on a perception that our central bank is done with interest rate cuts. And finally, Bitcoin. Bitcoin's had a rough couple of weeks. It's holding its own today, but barely above $86,000 US. Ford taking almost $20 billion US in charges tied to a sweeping overhaul of its electric vehicle business, which it has struggled for years to make profitable. The CEO, Jim Farley, spoke to Bloomberg TV. He says the overhaul is about moving towards profitable vehicles. Let's have a listen.
You know, we saw hybrids really take off the last couple of years, like, you know, last month we had a 30% increase in our hybrid sales. We're now number 3 in I think we're 80% hybrid market share in trucks. So we saw this happening. We also saw the more expensive EVs, you know, really suffer in the market and the more affordable EVs to do better. And then the last couple months really was remarkable. The EV market in the U.S. went from 12% in the industry to only 5%. And that really, in the end, was the big decider for us. But look, we're going to 50% electric. It's going to be hybrids and E-revs and electric. It won't be just pure electrics.
So, you know, every good trader knows you got to cut your losses when you recognize there's an issue. You're doing that in this sense with the F-150 Lightning as we now know it, and the T3 project, the next generation truck that would have been built in Tennessee. But you're able to, I guess, salvage some assets, and as a result, you've raised your profitability forecast from $6 to $6.5 billion for this year in terms of EBIT to $7 billion. Where are you gaining an opportunity from this, Jim?
Well, great question. This year, in the short term, it's really our cost of our company. Our quality is getting better, and so our costs are much more competitive. In fact, the Novelis aluminum has cost us more like $2 billion, but we're still raising guidance. Look, for this announcement, Matt, it's really about moving to more profitable vehicles. You know, we're going to make in Tennessee now an affordable pickup truck. I think it's going to really surprise the market. These are customers we know. Not a lot of guesswork in terms of the revenue, the cost we need to get at, and a more affordable van in Ohio. So these are going to be better investments for the company profit. And all those hybrid sales, you know, those are really profitable vehicles for us as we basically deploy hybrid across our lineup. But we're also going into the energy storage business to 20 gigawatt hour. You know, that's a big move. We're going to convert our battery plants from automotive batteries to energy storage batteries using LFP. That's also a big pivot that is profit positive for the company.
Jim, with regards to that pivot and the energy storage side of it, do you anticipate any concerns by the White House, by the administration here in the U.S., that you are partnering effectively with the Chinese company in order to do that?
Mm-hmm. Well, look, it's our plant, it's our people, and we designed it that way. We have a licensing agreement, but we feel like it's better to build these batteries in the United States with American workers, with our own Ford workers, and understand the IP than to import them like they're being done today. The best way to compete with the Chinese is to get close to the IP and then run the plants at Ford. When Ford knows how to build things, we know how to do this. So I think this is much better than for America. We're talking about thousands of incremental jobs versus importing batteries like we say today. Much better for America.
Well, to continue on the energy storage business, you mentioned that this will be profit positive for the company. And when it comes specifically to that new business line, how long would you expect before that alone becomes profitable?
Yeah, great question. Well, we're busy now. We have to move this business moves much faster than the auto business. We're converting our Michigan plant as we speak with all new equipment to make energy storage, which is slightly different than automotive with the LFP. And then we're building a whole new plant, converting Kentucky 1 to 20 gigawatt hours. And that will be landing in late 27. We're going to be selling and servicing batteries, not just the cells as a contract manufacturer. We're actually going to be selling the huge storage containers to utility companies and the AI data center companies in 27. We're already out there quoting this business now. We know what kind of price points we need to get to for it to be profitable. And this is not our first rodeo as a manufacturing company.
That is the Ford CEO, Jim Farley, talking to our Bloomberg partners. Let's have a look at how Ford is doing in the pre-market. The stock holding its own. Citi, the analyst Michael Ward says Ford is moving decisively here to rework its EV business, taking almost $20 billion US in charges, shutting down the all-electric F-150 Lightning truck, getting rid of that. Ward of Citi says previous generations would have debated a decision like this for years, allowing the cloud to remain, and would have looked for ways to pressure suppliers and dealers to pay for unplanned errors. But the Ford management, Citi says, is acting decisively here. Let's have a look at Roku because that stock got a double upgrade from Morgan Stanley. Morgan Stanley checking out the U.S. advertising sector and saying that they see a strong year ahead for U.S. ad spend. Because we've got some big events coming, of course, Winter Olympics and the Soccer World Cup. And, of course, politics, all attracting viewers. So Roku, as an advertising play, getting the nod from Morgan Stanley. Let's have a look at PayPal now in the pre-market. That company applying to become a bank in the United States. And analysts saying it should be approved given a fairly lax regulatory environment right now, but could take some years. And it's interesting, yeah, the Trump administration is apparently open to fintech companies getting into the banking system. And finally, let's have a look at Organigram, that cannabis producer and seller. That stock moving up in the pre-market. It posted fourth quarter adjusted EBITDA of almost $10 million, and the estimate was only for less than $7.5 million. Coming up, Anglo Tech winning approval to form a $50 billion US miner. We'll have more after this. The federal government has given its blessing to Anglo American's takeover of Teck Resources. That deal has been in the works for months. Let's get more from BNN Bloomberg's Lindsay Biscaya. Lindsay.
Yeah, and I should say, Andy, this is one of the final pieces of the puzzle for this merger to go ahead, is approval from the Canadian government under the Investment Canada Act. So that has been done. And because of this, the company promising to spend billions of dollars and create jobs in Canada. But we heard Industry Minister Melanie Joly talking about how this is a win for Canada. She said this is a significant win. It will benefit Canadians. Shareholders, of course, also gave their approvals from both sides. We saw those votes happen last week, and the plan is expected to offer investment for investors of more than 70% exposure to copper, and that merger will have more than 1.2 million tons of annual copper production. So again, it's not complete yet, but another big step has been taken to have this merger go ahead. And if it were to go ahead, this would be, again, one of the biggest copper producers in the world.
Yeah, that's gigantic. More than 1 million tons a year.
Yes, yeah. 1.2.
Because last time I checked, global production was a bit more than 20 million tons. So it's a good chunk.
It's a good chunk, yeah. And a lot of this going to be in Vancouver as well. Like we heard Premier David Eby talking about how this deal is good for the province of BC, because this would be, if it were to go ahead, one of the biggest companies. It would be the biggest company in BC's history.
Just remind us of a few of the criteria, a few of the things that the federal government wanted to see.
Yes. So to get approval, some of these things needed to be met. So under the terms of the approval, the headquarters of the company will be in Vancouver. Most of the company's executives and board members will be there as well. The company has agreed to secure 4,000 Canadian jobs and spend $4.5 billion in Canada over 5 years. So these are some of the agreements that so far the company has agreed to meet. We'll have to see whether that actually comes through. There's one final piece of the puzzle as well that needs to happen. The antitrust review needs to be complete. So this is to make sure this merger doesn't reduce competition unfairly. And we're seeing some economists coming out today saying they expect this to go through, but it could take anywhere from 12 to 18 months.
Lindsay, thanks very much indeed. Lindsay Biscaya, coming up, we're going to get more ideas on what to track in the year ahead. We'll be right back. With tariffs and geopolitical unrest, this year has seen some major market moves in oil, copper, and the commodity sector as a whole. Let's get an outlook for the year ahead. We're joined by Reid Ianson, economist at Kepler. Reid, thanks very much for joining us. It's a broad question, but what do you think will be the big theme in commodities? Can you single something out for 2026?
I think the big story is, where are the oil markets going? Of course, we have been predicting for a while that we are heading into a oversupply situation in the oil market that began this quarter and will extend into the first half of next year. Price has shown some resiliency, more than we were expecting, say, 2 months ago. And so I think the big question moving forward is, do we see more downward price movement into next year given the oversupply situation, or do we see the Chinese continuing to try and push builds into their SPR, which provides a bit of additional demand to the market and kind of helps to hold up that price somewhat. So I think that's kind of the big narrative moving into the first half of next year.
But you see a risk of oil dropping further?
Yeah, I think, if you were to look at, is the risk more to the upside or downside from current levels, I think it's clearly to the downside, just given the situation around supply and demand. Again, next year we see supply outpacing demand by 1.8 million barrels per day, with a lot of that oversupply coming through the first couple of quarters of 2026. So I think the downside risk is there.
What about this move by the federal government much closer to policies friendly to the oil industry, backing down on the emissions limits, watering down rules on pollution from electricity? This pro-oil shift has caught a lot of attention.
What I find to be interesting is the fact that the Trump administration has pursued a number of policies which are inflationary. The two big ones are implementation of tariffs and also immigration restrictions, and that could put upward pressure on wages. And so we have actually seen the Trump administration pursue a policy of trying to get oil prices down over the course of this year as an offset to the inflationary policies he's taken elsewhere. And so I think Trump is very much a pro-supply type of president at the moment, whether it's coming from the United States or OPEC. Trying to keep that oil price somewhat depressed is helpful for his administration.
I probably put the question in a confusing way. I was thinking about the Canadian government, Reid. There's really has been, the Prime Minister, Mr. Carney, has defied elements in the Liberal Party that are worried about global warming. I mean, he really has gone pro-oil.
Yeah, it's been really interesting to watch the shift in Canada. You know, the Canadian government now wants to, really promote a policy of building stuff. And I think that it, obviously extends to trying to get more midstream infrastructure to get Canadian energy production to the international market. And so I think even just this year, I mean, the shift has been notable. And I think we should expect more of it over the next couple of years for sure.
What about copper? Is it a given that copper prices will stay strong in 2026 with all these data center builds, for example?
I think the bullish scenario is absolutely on the table through the end of the decade. Of course, that's compounded by issues on the supply side as well. And so I think the upside for copper makes sense. Of course, you do continue to have these delineations between, say the international LME and COMEX benchmarks given U.S. tariffs. It has been interesting to watch how the Trump administration has used the threat of tariffs to try and build U.S. copper inventories. And so I think that you could see attempts to do that some more next year. But I think the upside is absolutely on the table for copper here over the next 12 to 24 months.
Any other commodities that you think will do well in 2026, Reid?
Yeah, I think natural gas is very much a bullish play. I mean, again, this is very much on the AI build-out story, not only in the United States, but globally. But, just focusing in on the U.S., we need a lot of additional power generation. A lot of that's going to be localized power generation coming from these small natural gas units. And so I think the natural gas story is probably a bullish one for next year. Of course, keep in mind, we will see a lot of additional LNG coming onto the market as well. So that could help on the supply side for those big import regions of Europe and East Asia. But again, I think natural gas is probably a bullish story here.
What about uranium and the nuclear stocks? Because I wonder, is there a risk that we'll just get dashed expectations when people realize how long it'll take to build these nuclear plants?
Yeah, I would say expect a lot of volatility in that sector. And of course, it's hard to trade uranium. It's not a very liquid market, so you kind of have to trade the miners. But again, I would expect volatility. If you're trading uranium in this kind of nuclear build out, you have to have a 5+ year time horizon, because I mean, the time that this takes to even just get government policymakers on board is going to take a while here. And so you got to have a long time horizon, expect a lot of volatility if you want to trade it, over the short run, I think. And
China, obviously, we've heard, talk and analysis for years that the Chinese economy is struggling. It's tricky to move to the so-called consumption-led growth model. What will you be looking for out of China? Because obviously that's central to the commodity market.
Yeah, I mean, this year they have gone right back to the same playbook that they've relied upon, which is this investment-led growth model, relying on a manufacturing build-out and infrastructure to support growth. And that has only intensified into the end of this year. We've seen retail sales numbers really weaken, and I think they probably double down again next year. We see more investment-led growth. We see a real reliance on inventory builds and net exports to support growth. The currency, they probably play around with their currency as well to support that. I do not really see much of a desire on the part of the Chinese government to shift towards a consumption-led model at this point, and the United States government doesn't seem that intent to push them in that direction either right now.
Reid, thank you very much indeed for joining us.
Thank you.
Rita Anson, economist at Kepler. Okay, there has been talk of more floor crossings after Conservative MP Michael Madd joined the Liberals. And that, of course, put Mark Carney's government one seat closer to a majority. CTV senior political correspondent Mike Le Couture has more on what could be ahead for Parliament.
Outside Michael Ma's constituency office, a small but vocal protest demanded answers to why the Markham Unionville MP crossed the floor to the Liberals.
I feel very upset, and we fight for our future, we fight for democracy, we fight for our children.
In a statement last week, Ma said he made his decision after listening carefully to the people in his riding about the direction of the country. Sources tell CTV News the energy minister helped recruit the former Conservative. Asked if there are others ready to join the government, Hodgson would only say this.
Let's say I'm getting lots of inquiries.
Conservative Alberta MP Matt Genereux met with Prime Minister Carney in November before deciding to quit politics. That was just days after Nova Scotia MP Chris D'Entremont crossed the floor, citing Pierre Poilievre's leadership. Now, in an interview with CTV's chief political correspondent Vassy Kapelos, the Conservative leader denied he is a liability to his party.
I'm very troubled that they made that decision, but the people in their ridings voted for the Conservative agenda that I'm continually leading on in the House of Commons.
One more floor crossing would secure a majority government for the Liberals. While he wasn't able to rule out more defections, Poilievre called the move undemocratic.
If Mark Carney believes that he should have a majority to go ahead with the high-cost policies he's running on, then he should get that mandate from Canadians in an election, not through dirty backroom deals.
Even if another Conservative crosses the floor, Poilievre says he will remain at the helm of his party for his leadership review in January. Mike Le Couture, CTV News, Ottawa.
Opening bells are next. There it is. Trading is going for this Tuesday at the Nasdaq. Newmark Group ringing the opening bell at the NYSE. It's ETF provider Harbor Capital. It's time for the first 50. We'll start off with our look at the North American benchmarks. They have been struggling a little this week. We did get belated U.S. job numbers for October and November. There was really no clear picture emerging. U.S. payrolls did rise in November after an October drop. The unemployment rate last month, though, rising up to 4.6%, up from 4.4% in September. So a mixed view here, but the bottom line really is U.S. job growth sluggish in the latest months, and we have got unemployment close to a 4-year high. So generally, the market sees this as pointing to a continued cooling in the labor market. Some stocks of interest here. WSP Global, the engineering firm, plans a massive acquisition in the United States worth more than $3 billion US, buying an outfit called TRC Companies to get much bigger in electrical engineering as well as other areas. Tech is on our radar. That company is going to be taken over, as far as the federal government is concerned, by Anglo American, winning approval from Ottawa. Let's have a look at Agnico Eagle. It's interesting how that stock's off its highs. Up today, we have seen gold trading higher. Gold very nearly back to record highs. Let me just check the spot price of gold very quickly. So the latest spot price I have is 4,327, and the record was October 20th at 4,356. So we're still, we're well less than $100. We're only about $30 away from the record high on spot gold right now. And let's have a look at organogram, underlying profit in the cannabis companies, the latest quarter exceeding expectations. Okay, time for some movers south of the border. We're joined by Jeff Morgan, Deputy Team Leader for the Bloomberg News Equities team. Thanks very much indeed for joining us, Jeff. What's going on at Humana?
Yeah, Humana is off a little bit today. I guess two things that are driving the stock a little bit lower so far this morning, and it's definitely one to watch. This is a managed care company with a very large insurance business. So about 85% of the company's revenue is from its insurance business. They have announced a bit of a leadership change there this morning. That's weighing on shares. The other thing that is happening this morning is they were out with their 2026 guidance this morning, which is a little bit softer than what Wall Street expected. This is a reaffirmation of prior guidance, and they're seeing $17 per share in earnings over the course of next year. Wall Street hoped for a little bit more. $17.06 is the consensus estimate on Wall Street. So a little bit light compared to what Wall Street expected, and so that's driving a little bit of weakness as well. You combine the two things, and what we're seeing is a stock that's off somewhat this morning, and definitely one to watch. This is one of the worst performing stocks in the S&P 500 so far.
And Ford slowing the pace on electric vehicles.
Yeah, not just slowing the pace, but also taking a great big charge with respect to its electric vehicle rollout. The company said that this was a new reality. It's seeing softer demand for electric vehicles, and also it's seeing a pretty dramatic rollback in some of the requirements it has for building, internal combustion engine vehicles, and a bit of a regulatory loosening in the United States. So this is an enormous charge that the company took, $19 billion, close to $20 billion. Absolutely enormous charge. The stock is actually up a little bit today, and Wall Street largely liked what it saw from Ford. Citi was out this morning calling it a proactive step, and it expects other companies will maybe potentially have to do the same thing. Citi also had a little bit of a shot at prior years and prior management teams, saying that in generations past, management teams would have debated doing a move like this for years and allowing that kind of cloud to hang over the company. So this is what they call a proactive step. Barclays was also out this morning saying it's kind of good to not only take off the Band-Aid, but they're expecting some other companies may also need to follow suit. The slowdown in electric vehicle sales and those kind of regulatory rollbacks are not only affecting Ford. That's a company-wide or an industry-wide, phenomenon that car makers are grappling with.
Jeff, thank you very much indeed. That's Bloomberg's Jeff Morgan. Up next, we're going to hear an argument that AI spending and continued monetary and fiscal stimulus will continue to drive markets up in the year ahead. Our guest says continued spending on AI and likely gains in productivity will be a factor among the factors pushing markets higher in 2026. We're joined by Philip Peterson, Chief Investment Strategist at IG Wealth Management. Great to see you. You do see continued heavy expenditures on AI infrastructure.
Yes, yeah. We think that's going to continue through 2026. We're going to continue to see a build out of data centers. We're going to see continued significant investment into AI research by the big players out there. But more importantly, we're going to, I believe, we're going to start to see productivity gains. We're starting to see companies embrace AI tools that are available out there. And I think we've yet to see meaningful gains on the productivity side, but I think that's coming in 2026.
Yeah, there's a headline. I mean, obviously, it's a broad, very complex question. There's a headline on Reuters today. Business leaders agree AI is the future. They just wish it worked right now. apparently some companies are having difficulty really getting productivity gains. So far, I know it's early days.
Well, I think you have to be realistic in it, right? That we do have the early tools today, and it's understanding how to utilize these tools at various functions of every single one's business to enhance productivity, whether that is just speeding up editing of copy, speeding up data aggregation, whatever it might be. All these incremental benefits will add up. I think if leaders are looking for some type of worldly solution to whatever it might be, that might be further down the road. Let's take the little wins, get on first base as much as we can before we start thinking about those home runs.
Reuters talked to people who run Cellar Tracker, a wine collection app, and they built an AI-powered sommelier. But the problem was the chatbot was too nice. It wouldn't criticize any wine. They had to tweak it to get it to be a little meaner.
Yeah, and I think that's part of it too, right? AI is not going to replace people necessarily. I think it's going to make us more productive. So we have to inject that meanness to know that's a wrong choice you have selected there, Andy.
Central banks, certainly the Fed, expected to go on cutting, even if the Bank of Canada is done. And that's generally positive for the market.
Exactly. Now, the Bank of Canada is on pause right now. We're not sure if they're done yet. I think some of the data has tended to be a little bit stronger over the past couple of months, surprised the bank to the upside. But we do think that there is the potential for one more cut out of the Bank of Canada. It might be a little bit more symbolic in nature than anything else. But if we do see weakness in the first half, we'll probably see another cut. In the United States, however, I think we can be assured that we're going to see at least 1, 2, if not 3 cuts through the year. I don't think we're going to get to President Trump's 1%. I think that's unrealistic given the economic conditions. But can we see the Fed funds rate between 3 and 3.25? I think so.
And fiscal spending, we know Canada is going to be spending on infrastructure, and the States is due for tax cuts.
Exactly. We see massive tax cuts coming through the OB3 taking place starting in January. Households are going to see tax rebates of significant amounts in 2026. Plus, we have the corporate tax incentives. So all of this together, combined with the monetary stimulus, is at least setting out for a stronger economic environment in 2026 than what we've had in 2025. And look, 2025 has been good. It has surprised to the upside. I think 2026 can continue along that path.
And OB3, President Trump's one big, beautiful bill.
Yes, exactly. Yeah, it's too long to keep saying that, so we just shortened it down to a quick acronym.
OB3. Now, to some extent, you reckon historically higher stocks can be a self-reinforcing thing because they make households feel wealthier, they spend more, that's good for corporate profit.
That's exactly it. So what you tend to see is a positive wealth effect. So when financial wealth is increasing, so we're talking about 401ks in the United States, RSPs in Canada, or outside investments, as they start to move up, individuals feel wealthier and that wealth turns into new consumption. We've seen this out of studies by Visa as well as Oxford Economics that show that for every $1 of new financial wealth, that turns into 15 to 25% of new spending of that dollar. And so we think that this is going to be another positive for the markets in 2026 because they're going to have stronger consumption because of that stronger household balance sheet that's going to lead to better profitability for companies that are selling to consumers.
One asset class you're a little wary of is bonds. Maybe you can put up the Canadian 10-year bond yield. So you wouldn't be overloading Canadian government bonds right now.
Exactly, Canadian or U.S. And the reason being is that bonds, while they continue to be a ballast to a portfolio, and they're important to own in a portfolio, we're looking at low single-digit returns for 2026 with the risk that long-term bond yields can start to trend higher. We see the term premium start to expand.
Term premium being the amount of risk compensation investors demand.
Exactly. Yep. For the longer the bond maturity, the payback needs to be greater. And given what we are expecting in 2026, we could see, especially in the United States, that 10-year U.S. Treasury yield nudge a little bit higher. Now, that has a couple things. One, higher interest rates bring prices of bonds down, but it also compresses valuations on the equity market. So we're not saying that this is the case, but it could be an environment where the economic conditions are so good that it leads to higher interest rates on the longer end of the yield curve that compresses valuations, and we could get a valuation correction similar to what we saw in 2018.
Before we let you go, what kind of questions or concerns are you hearing from the advisors that IG works with? I mean, what are they in turn hearing from clients?
Well, clients are hearing about the AI bubble, the potential for an AI bubble. That's the number one question that we've been getting, perhaps for over the last 6 months. Now, what we do and we address that is saying, look, is there a bubble potentially, but are we at the danger point? Is there great euphoria? No, not when you compare it to where we were in 1999, if that is the comparison using the dot-com crash as kind of that benchmark. Valuations for the companies that are leading in AI are far from where we were back in 1999. They're more profitable. They're spending those profits on R&D. So we wouldn't say that we're in a bubble right now.
Although there would be an exception, such as OpenAI, for example. Their revenue is tiny compared to their spending.
Exactly. But that's a private company being funded by other companies out there. So it's a question. Is OpenAI a bubble? Yes, if potentially there too. But we've yet to see, again, the full benefits of AI feed through not only that company, but all the other companies that are going to utilize the tools.
Philip, thanks very much indeed.
Thank you.
Philip Peterson has been our guest, Chief Investment Strategist at IG Wealth Management. Excuse me. Yesterday on Market Call, we were joined by Teal Lind, a manager at Lind Equity Fund. He covered North American stocks, and his top ideas were Uber, Blue Owl Capital, which is a player in private debt, and Pinterest, name we haven't heard much for a while. Today on the show, it's Gordon Reid of Goodread Investment Counsel. He'll take your questions on U.S. equities. Up next, we'll take a look at the Buy Canadian trend, and we'll find out if it is holding strong this holiday season. When US President Donald Trump slapped tariffs on Canada, people in this country rallied to buy Canadian goods. We're into the holiday season now. Is that trend still gaining steam during this big spending season? BDC says Canadians are spending more locally this holiday. We were joined earlier by Pierre Cleroux, Chief Economist at BDC.
Well, Canadians are going to spend an average of $943 for the holidays. This is about the same amount than last year. But what is really different is 46% are saying they're going to spend more on Canadian products and services. So this is important because this could really have an impact on the Canadian economy.
Martin, do you want to jump in?
Yeah, I just my question for you, Pierre, would be the very interesting report in terms of the movement is just the pressure on household budgets. We hear about it all the time. How much more expensive is it for a pressured household during the holiday season to buy Canadian and not go to maybe a cheaper global alternative?
Well, it depends what you buy. Canadians that are in the survey, they are saying that they are going to buy more, for example, on food and clothing that are made in Canada, on entertainment, for example, on services. So Canadians are making the right choice in terms of choosing, because like you said, budget is a bit tight this year. But what is very different is Canadians want to support the Canadian businesses, the local business, and that's the reason why they're shifting to more Canadian products and services.
And so, what does that mean for the economy if the 46% say they could end up buying an extra 50% of their goods were in Canada, and what would that contribute to the economy? How many jobs would that mean here that stay in Canada?
Well, according to our economic model, it would have a positive impact on the GDP, will increase by $11 billion, and that represents about 45,000 jobs. So we encourage Canadians for this holiday season to spend more in Canadian goods, and we can even have a bigger impact than the one we have estimated.
And if you were to encourage Canadians to spend, would it be on goods or would it be more on services, the restaurants, something that's more local? Because I imagine the leakage on buying goods is more likely to have less of a multiplier effect if you were to spend money on gift cards for local businesses and restaurants, etc. Is that right?
You're right, and that's what we encourage Canadians. If you don't know what to give, a gift card is from a local business. It's a great way to to give a gift, but also to give a gift that will have a positive impact on your community. Having said that, there's a lot of products that are made in Canada. Food is a good example. Clothing is a good example. Even personal care products that you can buy. Some of them are made in Canada. So good or services, the important part is to look at buying Canadian to encourage the Canadian economy. In this difficult period of time, we had trade tension this year. The economy has been slowing down. So anything we can do to support the Canadian economy, I think we should do it for the holidays.
Now, you mentioned about the made in Canada. I think one of the struggles people have had with trying to support this is what is actually made in Canada, what is something that kind of says it's made in Canada, but maybe isn't necessarily. And then we see some companies that are not Canadian, but then they make all their stuff in Canada.
You're right. There's a lot of different options. The good news is over the last 6-8 months, we see that it's a bit more clear. Often businesses will market themselves as Canadian business or Canadian product. They will have a logo as Canadian product. So it's a bit easier to make that choice today than I would say at the beginning of 2025.
And is there sorry, Martin, go ahead.
Sorry. I was going to say on that point, I mean, I've heard the term, maple washing in terms of trying to be seen as being Canadian. Are you seeing evidence of a lot of companies and goods and services, do we pretend they're Canadian more, or is it just not really a big factor?
No, I don't think it's a big factor. What we see more is Canadian who make Canadian products that maybe they didn't announce themselves, but market themselves as Canadian product. Now they do because they understand that Canadians are looking for Canadian products. And it's not only products, also we're talking about services, entertainment, for example, and tourism. Canadians have been traveling more in Canada this year than less in the U.S. And we saw the difference in the number. The tourism industry has been really growing this year just because Canadians made that decision to travel more in Canada in 2025.
Pierre Cleroux, Chief Economist at BDC, or Business Development Bank of Canada, which is a federal crown corporation. Coming up, we're going to take a look at the affordability challenges still plaguing Canadians. Inflation in November holding steady, according to the latest update from Statistics Canada. But underneath that headline number, there's a different story. CTV's Colton Prale reports on the good news and the affordability challenging Canadians.
Today's data paints a pair of contrasting pictures. A national economy showing signs of improvement, but one where everyday Canadians are seeing their monthly and weekly bills climb even higher. At a headline 2.2% increase, inflation in November was on par with October. But core metrics closely monitored by the Bank of Canada dropped below 3% for the first time since March, a sign its fiscal policy is working. But ask Canadians how they feel about the economy, and it's a very different picture.
It's the prices that we're interacting with every day that show prices have increased way more than our wages. And so you have that sticker shock value when you're at the grocery store, when you get your cell phone bill every month.
Prices for fresh or frozen beef are up nearly 18% year over year. Coffee is almost 28% more expensive. And this month, higher prices for fresh fruit, berries, sugars, and confectionery mean grocery prices are 4.7% higher year over year, the biggest jump in 2 years. Canadians are also paying more for their cell service, which climbed nearly 13% this year. According to Thiessen, part of the reason Canadians are feeling the impacts of inflation more is that in the last 4 years, food prices have climbed roughly 30%, while wages have jumped only 20%.
Colton Prale of CTV. Let's check in on the Canadian stocks right now. Let's have a look at the TSX. Still down from Thursday's record high close. Some stocks of interest here, though. IGM Financial, the big provider of mutual funds. That stock trading in record territory right now. There's a look over the past 10 years. So that mutual fund giant winning the approval of investors. We did see some gains in NFI. That is the bus maker. It's had major problems with batteries. It had to do a huge recall. They reached a settlement with the battery provider, Exalt Energy, on the costs of that so-called Generation 3 battery recall. Exalt will offer payments and offer personnel and assets that will cover up to 80% of NFI's $229 million provision for the problem, and the market seems happy to hear that. There's a new boss at BRP, the maker of ski-doos, etc. That company has appointed Renault veteran Denis Leveau as CEO. He succeeds Jose Boisjoli, who is retiring after more than 2 decades in the top job. National Bank of Canada analysts saying Leveau's extensive international experience bodes well because BRP has said it's focusing on growing international sales. And let's have a look at oil, because Brent, the world benchmark, sliding below $60 US a barrel for the first time since May, reflecting fears of a global glut. And you can see WTI is down as well. We saw some selling in the big oil names in Toronto today. Brent, in fact, down six times in the last 7 sessions. Got to take a break. We'll have lots more on the open after this. Welcome to the second hour of the Open. Let's check out the big stories we're bringing you from the BNN Bloomberg newsroom. Shares in Ford edging higher. The automaker has boosted its 2025 forecast and says it will also shift focus from electric vehicles to gas and hybrids as part of a strategic plan. The company will take a write-down of $19.5 billion US in charges tied to the overhaul. Most of those charges will come in the fourth quarter. Shares in WSP moving higher. That Montreal-based engineering giant has reached a deal to buy an American firm from Wargus Pincus, TRC companies. The price is $3.3 billion US in cash. TRC sells engineering and consulting services to electric utilities and energy firms. And WSP says this will position it as the largest engineering and design firm in the US. And shares in tech up about 1%. The federal government has approved the takeover of the Canadian miner by British-based Anglo American. This clears the way for the creation of a $50 billion US metals company focused on copper mines in Chile and Peru. Both companies say they will seek inclusion of the stock in Canada's major stock indexes and spend at least $4.5 billion in this country within 5 years. There is a look at the TSX Composite, down a little bit in early trading. Let's check out the U.S. markets. We did get job numbers for October and November, and they pointed to rising U.S. unemployment. You can see now that the NASDAQ has turned marginally higher. The S&P under a little bit of pressure. Heavy traders in the U.S. right now. Well, Broadcom finally showing some gains. It's up almost $4. And NVIDIA marginally higher, helping to lift the market. Let's check out gold, because gold trading near record highs. You can see edging up. I'm just looking, there is the February future. I'm just looking at the generic futures from Bloomberg. Still slightly down from the high of October 20th. The generic futures, according to Bloomberg's calculation, was 4,336 back then. Right now, still the generic still below 427, still below 4,300. But you can see the February futures now not far short of 4,400. So close to record highs. There is copper. Copper holding its own today, down slightly, down about 1%. Take another look at oil because there's no joy there. The Brent price, the world contract, dipping below $60 US. And we're seeing that weakness spill over into North American crude prices. And let's have a look at natural gas. Natural gas has had a rally and then it's something of a correction lately, but there are high hopes that LNG exports and demand for new power generation will tighten that market. And let's have a look at Bitcoin. Bitcoin well down from its record highs, up marginally today, up around 1%. The Canadian government has approved Anglo American's acquisition of Teck Resources under the Investment Canada Act. This approval formalizes commitments made by the miners and comes after shareholders in both firms gave their consent to the deal. We're getting more now from Bloomberg's Derek Duclos, executive editor at Bloomberg News Canada. Thanks very much, Derek. So Ottawa rubber stamping this deal?
Yeah, I would say it's not necessarily a huge surprise that they approved, but the timing is. I mean, we were not expecting it quite this quickly based on past experience. But you know, one factor here is that the companies did put forward a number of commitments that were meant to appease the Canadian government and make them feel like this was not sort of giving away the farm by allowing Teck to be sold. And it looks as though they got some modest improvements or enhancements to those commitments from Anglo and Teck, as part of the condition of signing off on it now.
I mean, it's interesting, wasn't it? The industry minister, Melanie Joly, just a few weeks ago was talking tough, saying, "Oh, they haven't offered us enough."
That's right. But on the other hand, here's what they have offered. The company will be based in Vancouver, and what was added to this, it appears kind of at the last moment to help seal the deal, is some definition around what that means. So 2/3 of senior executives from the new company, which will be called Teck Anglo, are to be based in Canada, and the language is something like, reside primarily in Canada. So why is this? I mean, it's to make sure that Vancouver office and the Canadian, the Canadian executive offices aren't just like, some sort of Potemkin village. We have kind of a rough experience in Canada with some of these. Barrick is a good example where, yes, technically it's headquartered in Toronto, but everybody knows that the Barrick head office in Toronto has been gutted over the years, and that there's far fewer people working there, and that a lot of the decisions, really have been made in London and other places. So they're trying to, the government's trying to insulate itself from that possibility and from criticism that that's what they're allowing here.
And there are still some approvals internationally. I understand the Chinese Commerce Ministry has to sign off on it.
Yeah, there are a few still to come, but of course this one was seen as potentially one of the most difficult, and it's sort of turned out not to be. One has to wonder too that everybody knows that Teck's a little bit vulnerable down the road to a takeover, if it were to remain independent, and certainly there's been lots of takeover interest in Anglo American, so. It's entirely possible that certainly the companies want to get this deal done as quickly as they could in order to prevent the possibility of interlopers or other bidders for one of the two parties. And it's entirely possible that's the conclusion the Canadian government came to as well, that it was better to get this done and get the promises that they could rather than risk some other sort of future action by another bidder.
Derek, thanks very much indeed for joining us. That's Derek Duclos, executive editor at Bloomberg News Canada. Up next, we're going to hear from the founder of Wikipedia. He's out with a new book called 7 Rules of Trust. Jimmy Wales is after the break. We've got a world in which there's conflicting claims when it comes to reality. It's exacerbated by social media. For many people, Wikipedia is still a reliable source. We were joined by Jimmy Wales, founder of Wikipedia, and the author of a new book, The 7 Rules of Trust. He told us about his book and his journey with Wikipedia.
It should be the basis of how we interact with governments, with journalism, with businesses. And to the extent we've seen this really big decline in trust over the last 20 years, I think it's a problem. And so the idea of the book is to say, look, we need to get back to a culture of trust. What are the proven things that we need to do to begin to rebuild trust in the world?
You do lean slightly libertarian. I won't bog us down on that, but you know, you're not dogmatic about it. But I guess that's part of the libertarian ethos as well. A society where we trust each other. We don't need rules enforced in a heavy-handed way.
Well, I mean, I don't know if that's a libertarian idea or just civilization. You know, certainly, I don't think anybody wants a world where, you know, the people in charge aren't trustworthy, where the people in charge treat everybody else like they aren't trustworthy. And so I do think, you know, more broadly than any particular political position, we all need trust in order to be able to function coherently in any kind of a democracy.
I know Wikipedia has been praised as reliable, and just remind us, it's self-policing, isn't it? There's a bunch of experts and editors, and they correct each other.
Yeah, it's very much built on a fundamental of trust, and I appreciate you saying we're reliable. We're always a little more concerned about ourselves, and we never try to overstate how good Wikipedia is. We think it's pretty good, but we know it needs a lot of work. But that's also a part of why people trust us, because they know we're trying really hard to get it right, and we don't always get it right, but we've got the right spirit, I think.
You take no advertising. You do appeal for funds. And of course, a lot of us over the years have found Wikipedia a darn useful tool.
Definitely.
Can you give us some idea of what it costs to run Wikipedia or what your revenue is? Can you give us any dollar figure?
Yeah. I mean, all the financials are publicly available. It's like $180 million a year. And the vast majority of the money for Wikipedia, 90+% comes from the small donors with an average gift of $10. So, it's really is about a grassroots thing. And that's also a part of the trust. We're not funded by governments. We're not funded by a handful of billionaires. We're funded by the general public, and that's really important.
Roughly how many full-time employees would you have? Can you give us a ballpark idea?
Yes, 700, 800. I mean, it fluctuates obviously over time, but not a huge amount considering, we have over 2 billion devices access Wikipedia every month.
And roughly how many editors do you have?
Well, it's kind of hard to judge, over the years, millions of people have edited, but in terms of the core community, the real active volunteers, it's probably 60 to 80,000, depending on how you look at it. But then there's the really tight-knit group, 3,000 to 5,000 people that really make all the difference.
Just returning to our theme there, are you in despair sometimes when you hear people talk about a post-truth era?
Definitely. I mean, I think people are still very, very passionate about wanting facts, and obviously various aspects of the social media environment are sort of shoveling all kinds of misinformation and nonsense at us. I think people are growing unhappy with that because it doesn't matter where you come from politically. First, you want to know what is the case, and then we can have a serious debate about what to do about that.
I love this detail from your biography. Your mum bought the World Book Encyclopedia, and they would send out stickers to update content when it became outdated, and you used to love putting the stickers in the book.
Oh, yeah, it was great. I remember putting the sticker in for Moon because people had landed on the moon, and they had a big article about that, and I thought that was pretty fantastic, yeah. I always joke that was my first experience editing an encyclopedia, even if it was just putting a sticker in the old version.
We've only got 30 seconds, and I'm sorry. There's controversy over whether you were the founder or the co-founder. Even your Wikipedia page calls you the co-founder, but you feel that you were essentially the founder, and I'm sorry, we are tight for time.
I feel that it is so unimportant. I think Larry doesn't get enough respect for his work in the early days. It's literally a fight that I don't no interest in having.
Jimmy Wales joining us there, founder or co-founder of Wikipedia and the author of The 7 Rules of Trust. Coming up, we are going to check out a trend in the ETF market, big inflows into these so-called spot XRP ETFs. We'll be joined by Mike Philbrick of Resolve Asset Management. Let's check out the markets. We'll take a look now at the TSX. We've seen a little bit of selling today, nothing drastic. It's been a great year, though, for our domestic exchange. Let's check out Tech Resources here. That stock was higher in morning trading after the federal government, perhaps faster than many observers had expected, approved the takeover of the company by Anglo American. The senior executives have to spend a lot of their time in Canada, and the head office is nominally moving to Vancouver. Now, there was a dispute over domicile of the merged company. I'm not sure if an actual resolution was reached on that one. And Tech/Anglo American have agreed to preserve jobs in this country and to spend about $4 billion. Let's check out IGM Financial, the big mutual fund company. That stock trading at or near record highs today. It's had quite a run. And over the past year, excluding dividends, you're up almost 80%. NFI, the bus maker, saw some buying today, that stock jumping. They had a problem with a bunch of batteries that had to be recalled for electric buses. The stock gaining today on word that it has reached a settlement with Exalt Energy over the costs of that recall for the Generation 3 battery. NFI is the symbol here. Exalt will provide cash and offer personnel and assets that will recover up to 80% of the provision of $229 million that NFI took to address the problem. And BRP has a new boss. The company has named Renault veteran Denis Leveau as CEO. And he succeeds Jose Boisjoli, who is retiring after decades at BRP. You can see the stock slipping, but it's had quite a bounce lately. And National Bank of Canada analyst Cameron Dirksen says Leveau has lots of international experience, and that should help BRP, which is trying to build up its international sales. Okay, the ETF report, Tuesdays and Thursdays. One phenomenon we're seeing is pretty big inflows into these so-called spot XRP ETFs. We're joined now by Mike Philbrick, a keen observer of the ETF market. Mike is CEO of Resolve Asset Management. Mike, thanks very much indeed for joining us. So apparently these XRP ETFs are different from other crypto funds. XRP itself is the native token of the XRP ledger, and it's a blockchain designed to make global payments faster. So this is not so much a cryptocurrency as a method of smoothing payments.
Well, yes, I think it is similar into some degree to the Ethereum and Solana blockchains. It is that layer that provides some opportunity for those cross-border transactions, which are a bit challenging. You can imagine you're trying to do some cross-border transaction, whether you're paying a service provider or paying for some resources, and you're dealing with different time zones, different opening hours for banks and things like that. So the idea that you could simply execute that at any time 24/7 and do that at a very relatively low cost is very appealing and does increase the velocity of money. So whilst the coin is a bit unique, it is not that unique. And I think these ETFs came on the heels of the resolution of the SEC lawsuit against XRP and Ripple. And so what we've seen is a bit of a later stage ETF launch. And then what we're seeing is a preference for investors to actually own these digital assets in traditional rails rather than having to worry about keys and sort of non-traditional custodial challenges.
Purpose Investments among the players that have one of these XRP spot ETFs out, and they say this digital asset, this blockchain technology, this solution is being used by financial institutions around the world already to help cross-border transfers of money.
Correct. And that's happening broadly and widely, too. It's not just XRP and Ripple. Ethereum has been, I think JP Morgan yesterday said they're launching a money market fund. You have the BUDL institutional money market fund where BlackRock manages that. And that's an institutional settlement layer for money market transactions for institutions that's been working for over a year. And that's built on Ethereum. So what we are seeing is the actual use cases come to fruition. We're also hearing about that. I think one of the other news items was the NASDAQ talking about trading for 23 hours a day. And that's in preparation for and in competition with crypto markets that are already trading 24 hours a day. And, again, Paul Atkins said that basically all the stocks, bonds, and money market instruments will be tokenized. That's right from the SEC chair.
Mike, what trends are you looking out for in ETFs broadly for 2026?
Well, I think, what's really interesting right now is the market looks like kind of there's nothing going on as it hovers near highs. But don't be fooled. Underneath the surface, cash is rotating quite aggressively, and it's rotating out of those AI darlings, as we've talked about previously, and into the companies that actually either build the infrastructure required for that AI fulfillment or are deploying AI and automation real time to leverage those use cases. So we're really seeing the S-curve of tech adoption slamming into the J-curve of real world build out. And so that data centers need power, you need power needs and engineers, factories need more shifts, markets need to be prepared for longer hours. And so, this WSP news we saw, that's really, the power grid muscle. This is power engineering infrastructure at play that needs to be built at scale. And so I think that rotation is real. And you got to think about looking at your portfolio today. Do you have too much exposure to that sort of Mag 10, if you will? And look, even in Canada, look at the XCS, the TSX small caps, or the XMD, the TSX completion index. These indexes are heavily weighted to those financials, industrials, materials, those companies that are going to benefit mightily from the actual rollout that's going on. You can also look at healthcare and biotech because these are going to be things that take advantage of AI, deploy it, and actually build more earnings out of it. And I think that's the real use case going into 2026. You want to see those use cases come to fruition. And the markets are already telling you that. If you look at those charts, they're pretty bullish.
So XMD is one ETF you mentioned there, and that, of course, is it tracks the stocks in the TSX Composite that aren't in the 60 blue chip index. And let me just check over the past year. That one up, including distributions or dividends, up almost 40%. And just looking at and there we have the ETF. It's showing, up 35% excluding dividends. Just finally, we've seen these massive inflows into ETFs this year. Bloomberg reckons US ETFs will take in about $1 trillion US dollars for this year, breaking the annual record by 17%.
Yeah, and that's been like you've seen lots into the traditional passive area, but you're also seeing a lot of ETFs developed on the innovative side. We've seen a lot of the single stock covered writing or single stock levered ETFs that have garnered a huge amount of assets. And those are more, those are shooting with a rifle. Those are probably more trading oriented than investing oriented.
Yes.
But certainly the suite of opportunities for people to take advantage of things and position their portfolios has never been greater. That also brings in the paradox of choice. You should probably think about making sure your portfolio is well balanced, making sure you have the right amount of bonds, making sure you're not too heavy into the AI tech, mega caps, and start to look at completing the portfolio a little bit more. Look, if you're a Canadian investor, Canada provides a wonderful diversification opportunity that is absolutely tilted to what's going to be required to build that AI infrastructure out.
And another trend, just interesting, south of the border, apparently more companies are getting approval to have their mutual funds also traded as ETFs.
Correct. And this came because the Vanguard had a patent, actually, and that patent expired. So they had a specific set of rules that they had exclusivity on in the mutual funds and ETFs that they managed. When that expired, you had basically a great number of mutual funds in the US start to look to transition to an ETF, because the ETF structure allows for the deferral of capital gains in a roundabout kind of way, where mutual funds actually have to pay those distributions every year. So there's a bit of a disadvantage for mutual funds that's going to be closing. And so, yes, you saw that huge rollover opportunity as well.
Thank you very much, Mike. Really appreciate it. Mike Philbrick, CEO of Resolve Asset Management.
Always a pleasure, Andy.
We're going to take you now to a live event where the Minister of Government Transformation, Public Works and Procurement, Joel Lightbound, is announcing new steps under the government's Buy Canadian policies.
And spending, high-speed rail and housing construction. But it's not just what we build, it matters how we build. And importantly, we're building Canadian. That's why I'm glad to be here to announce the next step of our Buy Canadian policy. Because Canada needs to be its own best customer. When the federal government spends, we will prioritize companies and the use of Canadian materials. This is a big shift in how government operates, and we're doing it to maximize the use of public dollars to strengthen and support local businesses and jobs. Today, I'm announcing that our Buy Canadian policy is coming into force. Starting today, the Buy Canadian policy delivers two clear actions. First, Canadian suppliers and Canadian content are prioritized in strategic federal procurements. This applies immediately to contracts valued at $25 million and over, but the policy will expand to contracts valued at $5 million and over by the spring of 2026. In other words, companies with a real footprint in Canada, those that invest here, employ Canadians, and innovate domestically, will receive a clear advantage when they bid on federal contracts. Second, effective today, large federal construction and defense projects valued at $25 million or more will be required to use Canadian-produced steel, aluminum, and wood products where a domestic supply is available. These materials must be manufactured or processed in Canada, not just sold by distributors, so as to ensure that federal projects genuinely drive demand for Canadian-made material. This new policy applies across federal departments and agencies and will apply to Crown corporations and grants and contribution programs of the federal government. With Buy Canadian, we are fully leveraging public procurement as an economic development tool, strengthening supply chains, supporting jobs, and helping Canadian businesses compete globally. Le message est clair. Le Canada investit d'abord dans ses travailleurs et ses entreprises.
We invest first of all
Parce que chaque contrat
in our
fédéral est une
companies, in
opportunité
our
de
workers,
stimuler notre économie,
to stimulate our economy, and to support our community, and also to build a strong Canada.
Je vous remercie beaucoup.
Thank you very much.
Et de participer à cette annonce aujourd'hui. C'est un honneur pour moi d'être ici.
It's an honor for me to be here today, and thank you very much again.
So that was the Minister of Government Transformation, Public Works and Procurement, Joel Lightbound, issuing what sounds like firm rules on using Canadian steel and wood, for example, in any government project, construction project valued at more than $25 million, and indicating that they won't be accepting fudges, stuff that simply gets distributed by a Canadian company. The materials actually have to be produced in this country. It's fascinating. Of course, the Americans have been up to this for years with their Buy American. Even the previous president, Joe Biden, beat that drum. Ottawa's made noises in this direction naturally during the current tariff turmoil. President Trump still with major tariffs on Canadian aluminum, steel, and lumber, although the tariff burden on a lot of other Canadian exports relatively light. In any case, the federal government saying that they are going to buy Canadian wherever possible. Coming up, we're going to bring you the latest headlines. Shares in Tech Resources edging up about 1.5%. British miner Anglo American has received approval from the federal government to acquire the Vancouver-based company. This clears the way for the creation of a $50 billion U.S. metals company focused on copper in Chile and Peru. Both companies say they will seek inclusion for the stock, the United stock, in Canada's major stock indices and spend at least $4.5 billion in this country within 5 years. Stellantis says it has surpassed 1,000 new hires for the forthcoming third shift at its Windsor assembly plant in Ontario. The automaker says nearly 240 of those hires will be transferring from its Brampton factory. You'll recall that Stellantis announced in October that it would move production of a Jeep model from that factory to Illinois. The company expects to hire up to 1,500 workers for the additional production shift in Windsor by the time it launches in early 2026. Kraft Heinz is replacing its chief executive officer, Carlos Abrams Rivera. On January 1st, former Kellanova CEO Steve Cahillane will take over. The move comes after the food company said in September that it will split into two entities. Kraft says the new boss will head, quote, Global Taste Elevation, the unit that deals with brands such as Heinz ketchup, other condiments, and boxed meals. And its board will start a search for a CEO to lead the other company. North American markets are now down. The Nasdaq was briefly positive earlier, but slipping about 1/3 of 1%. Let's have a look at oil. Not much joy there, and you can see the price barely above $55 now. It's just been a precipitous drop for crude over the past, well, really since the summer. And let's have a look at gold. Gold trading in record territory today. Those February futures hitting a new high. Let me just check the spot price once again. Spot, of course, well, all gold prices have soared this year. Spot about 4,320 right now, still down from 4,356 in late October. And finally, the Canadian dollar. Let's have a look at what it's doing. The U.S. reporting generally sluggish job numbers for October and November, unemployment climbing, and of course that does point to the possibility or the likelihood of more rate cuts by the U.S. Federal Reserve. Coming up, hot picks, we're going to check out 3 plays in technology. Time for hot picks in technology. Our guest has Microsoft as his top selection. He says the company is a clear AI winner. Let's get more from Jed Ellerbrook, Portfolio Manager at Argent Capital Management. Jed, thanks very much for joining us. Tell us, what is the bull case for Microsoft when it comes to AI?
Hey, Andrew. The bull case for Microsoft when it comes to AI is that Microsoft Azure is the fastest growing cloud computing business in the world. Their big customer, OpenAI, is seeing rapidly rising usage and workloads. Azure benefits from that. Microsoft is also able to hold in their operating margins despite that really strong growth, which is something most cloud computing companies have been unable to do. Oracle is struggling with margins going down a little bit in exchange for that big revenue growth. Microsoft doesn't have to do that trade-off. So that's great. And then finally, Microsoft's software business is also performing well and growing consistently. So I think Microsoft is really firing on all cylinders today. Revenue growth accelerating, margins holding in, continued strong investment in data centers that are generating a clear ROI.
You say that Microsoft is aggressively building out data centers to handle its enormous computing needs, but they're doing it in a prudent way?
They are. Yeah, they are. All these companies, all the cloud computing giants, Microsoft, Amazon, and Google, they all have more demand today than they can satisfy. And more supply comes from opening up these big new AI data centers that are under construction all over the world. And so they are chasing demand, but they're doing it in a prudent, responsible way. They're making sure that they build data centers that will be fungible and usable for a variety of different workloads and tasks. And they're not just building anywhere and everywhere they can get permitting.
Let's get on to your next player, and it wouldn't immediately leap to mind as a tech stock, but it's Apollo Global Management, private equity giant, and they are becoming a major player in data centers.
They are, yeah. Apollo has expanded recently into the financing of data centers. I think that Apollo is a compelling stock because the valuation has come down as the stock underperformed in the first half of 2025, or maybe even first 3 quarters of 2025. It's since started to rebound, which has been nice. But I think the company is seeing really strong demand for their alternative investment products. And they've also got an upcoming fundraising cycle that's going to boost their growth in 2026 and 2027 as well.
Right. I mean, they've teamed up, they're teaming up with our own Brookfield, among others, Apollo Global. How much of is a big part of their asset base now focused on tech?
It's still pretty small today, but it's growing rapidly. 80% of Apollo's business is private credit lending. And the infrastructure group focused on data centers is a small chunk of that, but growing pretty rapidly. And I think that private credit, there's been a lot of fears with regards to that. A couple higher profile bankruptcies, mostly tied to the auto sector, have really soured sentiment on private credit lately. And I think that those fears are overdone and will be disproven over the next couple quarters with just consistent execution from Apollo and Brookfield and other private credit companies.
And then finally, Tyler Technologies. Just remind us what they do and what has caught your eye here.
Yeah, Tyler's a niche business that most people have not heard of. So they provide technology services to cities, municipalities, counties, and states, mostly in the United States. So that is a relatively slow changing, slow to adopt technology, unsophisticated client base. They need help managing the operations of their communities. So that might mean utility billing systems, accounting, courts and justice software systems. And Tyler provides all of these things. They're kind of the best of breed supplier to this particular niche. They have about 50% market share. They've been growing that market share over time, and they're highly profitable, so they can reinvest in adding AI functionality on top of their existing software. And I think that their client base is going to be eager to adopt those AI add-ons over the next few years.
That's interesting. And so when you say an AI add-on, what is that? Just remind us.
Yeah, sure. So it's oftentimes something simple. Instead of filling out a long form online to rent out the gazebo at the local community park, it might be a more like kind of chat interface, like a ChatGPT style interface that's easier to use, self-service, quicker for consumers to use, and results in a slightly happier community. And cities and states all around are going to be adding functionality like that to make things greater self-service, so they can employ fewer people in call centers and help desk positions.
I don't know. Some of the self-service, though, I'm a little wary of, Jed. I think it's going to be frustrating. I mean, for one thing, if an organization's AI tells you something, can you rely on that? I mean, are they committing themselves?
Yeah. Data integrity is a huge issue. And I think that is slowing adoption of these tools, both for consumers and for businesses. And Tyler's trying to take it slow, be deliberate, have really high accuracy rates, so that way people can trust it.
Thank you very much. And actually, I just want to correct something there. I said I don't know if Brookfield and Apollo have yet teamed up on data centers. I was getting mixed up there with Capital Power, or one of our electric generators. But I'm sure it's not beyond the bounds of possibility that the two could team up. Jed, thank you very much indeed. Really appreciate it.
Have a great day.
Jed Ellerbrook, portfolio manager at Argent Capital Management. Coming up, we got a huge acquisition by WSP Global, the engineering company, valued at more than $3 billion. Buying a U.S. company. We hear from the WSP CEO after this. Okay, so we have a big acquisition by WSP Global, the engineering company. It's buying a U.S. outfit called TRC Companies in an all-cash deal valued at $3.3 billion U.S. The company, WSP, pushing deeper into the power and energy sector. We're joined by WSP CEO Alexandre Leroux. Thank you very much indeed for joining us.
It's a real pleasure to be here. Thank you.
Tell us about this company you're buying, TRC. What do they specialize in?
Well, it's a premier brand in the power and energy sector, so I'm extremely pleased about that. And the acquisition of TRC, combined with the acquisition of Power Engineer that we completed a bit more than 12 months ago, will really cement our position as the undisputed leader in the transmission distribution space in the U.S.
And you also say that this is going to make you the biggest engineering and design firm by revenue in the U.S.?
Yeah, with this acquisition, 8,000 people and $1.2 billion U.S. in net revenue, we are now, by total revenue, we are now the largest firm in the U.S. in engineering and design. So quite pleased about our position now.
Sorry, Alexandre. So you're bigger than a Fluor or a Bechtel or a Jacob Engineering?
Well, we need to be careful not to add the gross revenue of the contractors. But if you really take the pure engineering firm like the Jacobs and AECOM and others, indeed, our total net revenue exceeds those of the firms that I just mentioned.
You are selling some stock here, at least 850 million in shares. Is that in Canadian dollars or US? Can you clarify for me?
That's in Canadian dollar.
Right. Okay. But you basically, how will you finance the rest of the purchase price here?
It's just public bond and debt financing that was secured just prior to the transaction.
So obviously you're pretty excited here. I mean, the electrical build out in the United States is just stupendous, in large measure because of the power needed for data centers.
Exactly. I mean, and we need to remember that data centers, despite the hype and everything that we hear around data center, it's still to this day a small portion of all of the electricity consumption in the U.S. And in Canada, for that matter. So we really wanted to position our firm at the forefront of not only the energy transition that is taking place, but the energy addition that is also taking place. All the transmission line, the average age of the transmission line in the U.S. are about 30 to 40 years old. So they're all going to have to be replaced. Connecting new transmission lines to existing grids or new grids will also be a real opportunity for us. And similarly in Canada, I mean, the average age of the transmission line are quite old. So all of that will have to be replaced, but also new grids will have to be designed. So we're quite hopeful that we have entered in the last 24 months in a very high growth area for the company.
Do you find you're turning away business in the electrical area with such a big business, such a big build out?
There's a lot of work, and we expect that a lot of work will take place over the course of the next decade. If I look back at the TRC track record on organic growth over the last 4 or 5 years, CAGR of anything between 11 to 12% of organic growth. And similarly, a year ago, the acquisition that we completed in Power Engineer was a similar track record. So we're quite hopeful that this will go on for quite some time.
Did you ever think you'd see such excitement about electricity? I mean, for decades, there was really very little growth in electrical demand in the United States and Canada.
You are right in saying that. But as I just said, I just mentioned, Power Engineer, for instance, for the last decade, they've been growing at north of 10% just organically over the last decade. So I think maybe this wasn't discussed as much, but really the aging infrastructure that the U.S. is faced with is something that will need to be tackled. And I see this as a real opportunity for us to expand the scope of services that we can offer to the major IOUs in the United States.
Alexandra, Canada, lots of other countries, including Britain and Ireland, people are frustrated at how long big engineering projects take, partly because of bureaucracy and an endless process of public approvals and NIMBYism. Do you think times are changing, though, that it is possible to speed up these big developments?
Well, the proof is in the pudding. So I feel that now all of our governments are well-intended. They're well-intended to expedite the approval of large infrastructure projects in the U.S., but also in Canada. And we see it not just at the federal level, but also at the provincial level. So time will tell, but at least I have not seen that level of intention and the desire to speed up infrastructure projects or the approval of infrastructure projects in a long, long time. So I think that's all very positive.
Now, you yourself are a financial type. You joined WSP as CFO in when you became, 2010, you came in, and then 2016, you were promoted to president and CEO. Do you find it difficult sometimes talking to engineers? Do they try to baffle you with their engineering jargon, whereas you're a financial guy?
Well, look, I always like to say that, I'm surrounded by people that are much smarter than I am. So, but at the end of the day, I feel that we're very complementary. I think I bring a lot of skill set to the table into this firm. And I do feel also that our people are bringing incredible domain expertise to our clients. So I think it's been an incredible marriage for all of us. And it's an honor for me to lead this team.
Next time we have you back, I'd love to ask about these super skinny skyscrapers you guys are famed for, including the Steinway Tower, these super narrow. I'd love to hear about the challenges and finances of that, but we better leave it. Thanks very much indeed for joining us at short notice.
It's a real pleasure. Talk soon.
WSP Global CEO Alexandra Leroux. Know Your Options is back. Tune in tomorrow at 3 p.m. Eastern to get all your options trading questions answered by Chris Tom of Moat Financial. Send your questions in now to knowyouroptions@bnnbloomberg.ca. Thanks very much indeed for watching The Open. Morning Markets is up next.